Hello traders, this is Chris from thetraderguy.com taking a look at the February 3rd trading session. It is a non-farm payroll Friday, which truthfully is probably the worst day of the month to trade, although a lot of people will tell you differently. Now, having said that, I have $CAD in front of you. You can see that we're trying to form a bit of a hammer. It's about 1 o'clock New York time, so the candle may look a little different by the time it's said and done. But it doesn't matter. I still see the same signal. So I'm going to go ahead and delve into that right now. The Wednesday candle was a shooting star at the bottom of a downtrend. That's a very negative sign, but I have seen 130 as support for a while now. Due to previous action, I think that continues to be the case, and that explains, in a nutshell, why we have the hammer. So looking at this, I think the easiest way to trade this is to simply set a couple of orders. We'll see what happens. And I would not have these orders live while the announcement comes, but after the announcement, maybe like an hour later, I would believe them a little bit more. And essentially what you're going to do is you're going to look at the low here and the high from the resistive candle, and you're going to trade whichever direction. So with this being the case, I would have a long position above 1.31028. So let's just say, for simplicity's sake, 1.3105. So we've cleared that a little bit. I would aim at that point for 132.5, and that's what I will be doing. I would have a stop loss maybe down to about 130.50, just to give it a little bit of room. Really not a whole lot to base it off of. So that would be your long situation. And I would wait at least an hour after non-farm payroll to place that trade. Now, as far as selling is concerned, you could have a scenario where we break down. And if we break down below 129.67, so again, I'm going to give it a couple pips, 129.65, I'm a seller. With this one, it's a little easier where to put my stop loss. I'd put it just above 130. And at this point, I would probably hang on to it for a little bit, expecting about 127.5 before it's all said and done. So nice 200 pip run, roughly, with about a 50-ish pip risk. So that's actually probably a little easier trade to take. This will be especially interesting if the oil markets are rallying at the same time, so keep an eye on them as well, WTI specifically. If it breaks $55, which I don't think it's going to, but if it does, that'll really accelerate this move lower. So we've got a possible trade here in the CAD. We'll just have to see how it pans out. Thank you for watching. Don't forget to subscribe, and I'll see you on Monday.